the edge of the action where it's all happening right now on the trading floor there in Chicago at the end of LaSalle Street. Oliver Slope Blue Line Futures. Oliver, a little bit of strength over here in the soybean market, but it started to wane just a little bit. And look what we're doing over here in the corn and the wheat. Let's first start with soybeans. What's behind this? Was this export number that big of a deal?
Well, I think there's, more importantly, the talk that there's potentially some more sales, maybe probably to be seen in next week's report. March contract obviously working up against that psychologically and technically significant $9 handle. That's going to be a big line in the sand going forward, especially with the shot clock winding down on March futures. 890 previous resistance, now going to be support going forward. If we can kind of maintain this traction that we've gotten over the past several sessions, potentially we see an extension towards 915 to 920. But I think ultimately you start to see things level out a little bit here until we get new news. Now on the corn, we're actually quite a bit more optimistic despite today's price action. We're still in the middle of a range, a stick in the mud for the past week and a half or so. But the fact that we weren't able to break down on the back of a bearish USDA report earlier this week is what we're calling a fundamental rejection. There's no new sellers willing to step in at these levels. So I think a lot of the bad news is potentially priced in here. And if we can get some traction, get out above resistance, 385 to 387, I think that could potentially spark short covering. And again, as I mentioned with soybeans, shot clock winding down on March futures. If you're going to look at this at a longer term play, you're going to want to look out to that May contract.
Okay, and the wheat market, is it trending now behind what's going on over in the corn market? And the reason I ask is because, you know, they're in mid-January, maybe even the first couple of weeks of January, it actually looked like wheat was trying to be the leader in all of this, but now it certainly has softened here.
Wheat certainly has, and we've been talking about the bearish head and shoulders pattern developing for the past several weeks. That right shoulder has failed, and we bumped up against previous support, 548 to 551 today. That's now resistance. We weren't able to get out above there, and so the bears are still in control, and we're targeting a move down into the mid-520s. Another kind of headwind for the market is the fact that the U.S. dollar is at multi-month highs, and that does not bode well for wheat bulls, especially with the wheat bulls holding a fairly large net long position here.